Chen Ding. MSCI said this week that it's going to add China A-shares to its indexes, but not right away. That sent ETFs down. What do you make of this decision?
Yeah, I think the MSCI's decision is a little bit disappointing in the market. But I think we are almost there. Very, very close to get MSCI adding China A into its index framework. And also we observed that FTSE already did it last month. And I think it won't be wait too long, because MSCI also in the announcement mentioned that they will give China A flexibility anytime they think it's suitable, they will add in China A in. So as an investor, I think we're better to be prepared.
And Chinese stocks have had an amazing run this year, even though the Chinese economy has been slowing down. Why don't you talk about whether or not the stock market reflects that economy? So
we always say buy low and sell high applies to the economy as well. So you just address that currently Chinese economy not looks that good. And because China right now is reforming everything, so the central government is trying to boom in the economy in another way. So for instance, in China, we are reforming the biggest enterprise, we call it state-owned enterprise. We let the strategic sectors, the central government merger and acquisition, make the biggest one be more stronger, and let the competitive sectors to let it go and let the private sector get into in those sectors. So we will think the central government is trying really to open the whole society, open the whole industry to everybody. So I think currently is a good time to get in. And in the meanwhile, you know, the China GDP is count down like 12% of the global GDP, and foreign investors only count on 2% of the stock markets. So, you know, foreign investors, you are far away underweight of China. Yeah.
And what's the best way to invest in China? Is it through ETFs or actively managed? So do you want to be passive or active going into China? How does CSOP do it?
So CSOP, we provide ETFs to our clients. So we think ETF is a very transparent and efficient way to get into China. And also we provide like FTE in US. It's the largest 50 Chinese A-share market, A-share stocks. And also in there, we give the market some favor. We provide this product specific features called fungibility. Means that the US investor, if they hold the AFTY here, they have the access to sell the shares after the US trading hour in Hong Kong trading hour. So they will give the people flexibility to doing that, even after hour trading. Sometimes we call it 24 hours trading.
All right, and then finally, we're expecting a rise in interest rates here in the US. Might be later this year, might be next year. But usually or traditionally or typically, this hurts emerging markets. How do you think a rise in rates here in the US will affect China?
So what would I say? So for China, obviously, currently we categorize China as an emerging market. And also, don't forget, China is the second largest economy. So we'll see until then, yeah.
All right, well, thanks a lot for coming on.
Thank you.
Thank you for watching The Street.